Hello to all traders and welcome back to another market review brought to you by Orbex. Capping off the week then, looking at a progressive dollar. Well, the Eurozone PMI data has come in for most of Europe and it's looking quite bleak, and that's why we've had quite a sell-off in not only the euro but the pound and pretty much all the other currencies across the board in the Eurozone against the dollar. So looking at the euro dollar at the moment, pretty much heading towards parity, because breaking the 104 area, we have actually just kind of secured that back again. But if we look at when the data was released, we've dropped down to, more towards 103 than it was 104. So it has had a steady comeback since then. But in the overall picture, we're looking at a very progressive dollar. There are bets now that the Fed might not even make any interest rate cuts at the end of this year, and it will steadily probably not be as aggressive going into next year, especially under Donald Trump, who is expected to grow the economy quite significantly. So saying that, will the Fed basically be looking at other ways of trying to get inflation lower, even though it is not at their magical 2% mark at the moment? So lots to digest, lots to get involved in. Are we avoiding every session for next year as well? We'll have to wait and see. But the progressive sign is, as I said, that the dollar is on the incline at the moment, and as you can see here, the euro, we haven't really seen these particular areas since, let's just go on the daily chart all the way back now, going back all the way to the back end of 2022. So we're at a 2-year low at the moment, pretty much. We've had quite a progressive ride since then, a few ups and downs, but failing to break this particular handle just above 112 before we saw roughly about 600 to 700 pip drop in the last few weeks. So that's been quite significant. And as I said, it's across the board. If we look on cable as well, that's progressively sliding lower. We're just not really getting the figures from the Eurozone PMI data today that we were expecting. And obviously coupled that with the fact that we are expecting the Fed might not be so aggressive. Donald Trump's next 4 years is expected to be the usual thing of cutting taxes, more monetary fiscal spending, so that will boost the economy quite significantly, avoiding a recession. So naturally the dollar started progressing quite significantly. So let's just turn our attention just one more time to euro dollar before we move on to the dollar index, because we're just seeing now that price action is really subdued. We did get quite a catastrophic failure just above the 109 level, and that was when the presidency was selected for Donald Trump. And then since then we just have had wave after wave of downside potential, and now moving, as I said, towards parity, which is only a few hundred pips away. And if you think a few hundred pips isn't really that much of a big move in this market age at the moment. So let's just take a quick look on the DXY index, because like I said, it popped over 108 just before retreating now. So that has had quite a momentous move. I'm just losing my words because there's so much to get through in just a short space of time, and we're just seeing now wave after wave of upside potential. Again, you can just see the magnificent meteoric rise in price action when Donald Trump was the as president-elect selected on that particular day, and now we're just seeing now price action move higher and higher. What's most interestingly though, because a lot of traders, as you probably know, when gold is doing one thing, the dollar is doing another thing. It's not the case at the moment, because the gold is actually progressively moving higher and higher. That's because global tensions are simmering at the moment, and obviously if you are looking at the headlines wherever you are in the world, you'll notice that the first story is the fact that Russia and Ukraine conflict is getting more and more deadly now, and it is looking likely that the gold will start spiking quite significantly because of this. So, with the UK and the US getting involved even further, we're just seeing now that 2700 seems to be the next psychological break. If we do break that, then price action is bound to start moving higher and higher. Will we get that record high anytime soon? We'll have to wait and see. But because we had such a dramatic sell-off, as you can see here, the V-shaped recovery is well and truly on, and don't be surprised if we do start reaching 2800 by next week, which will be, as I said, not really that surprising in this particular market environment. So let me know what you're trading on, what you're thinking going into the weekend. Is there any particular markets that we should keep an eye on? To be honest, it's all about the gold and dollar at the moment. Oil is probably something that we can possibly keep an eye out for. It has been quite choppy in the last few trading sessions, not really going too, having a slight bullish run, but not too aggressively. So we'll wait and see if that does get capped as well, especially with Donald Trump coming into the White House in January. So that's all for me today. Thank you very much for joining me once again. This video will be posted on our YouTube and Telegram channel, so feel free to subscribe, like, and leave a comment, and we'll get back to you as soon as possible. So until next time, have a great weekend ahead, and bye for now.